Have you ever felt like you're just taking shots in the dark when you're entering trades? I know the feeling, and that's why I've developed a simple, repeatable process that takes the guesswork out of trading. My simple trading plan is on a post-it note. And in this video, we're going to go through each step I take before I enter a trade. I'm going to walk through every decision I make so that way you can understand the why behind everything that I do inside of the market. So the first thing I do is I track major news and any catalyst that may affect the market that I'm trading. So for instance, if I'm looking at gold, I'm reading stuff about gold. If I'm trading, let's say Apple, I'm reading stuff about Apple. If I'm trading USD JPY, also known as UJ, then I'm tracking stuff on that particular market just so that way I can be aware of anything that may be coming up. And for me, it's really important to understand the economics of what's happening inside of the market because basically it helps me understand the overall market direction. Now, of course, we can find that from technical analysis, and I have plenty of videos on this channel talking about that, but the fundamentals, the things that happen inside of the real world guides, for the most part, what happens on the charts. And that's why I like to read these news reports and data releases so that way I could get a sense of what may happen inside of my market before it shows up on the chart. The next thing I do is my technical analysis, and that is just straight up top-down analysis. So the first thing I do is I start on the weekly time frame and I mark up my support and resistance levels. And then next I go to the daily time frame and then I mark up my support and resistance levels if I see anything new. The levels that I drew on the weekly, I just refine those levels just so that way it makes a lot more sense, because as you move from time frame to time frame, you're going to get a lot more data because there's going to be a lot more candles that form on that particular time frame. And you want to make sure that you adjust your support and resistance levels on that time frame so that way it could make a lot more sense to you, and you just basically just follow this process. So I typically do the weekly, the daily, the H4, the H1, and then I usually stop there because typically my entries are going to be on that H1 time frame, maybe the 45 minutes, sometimes the 30 minute, the 15 minute, and sometimes the 5 minute. So pretty much I use all of those lower time frames as entry points, and then I use the higher time frames to do my technical analysis. And if you're looking for an in-depth example, then I have a lot of videos that have the chart with me, gold chart with me, US 30 chart with me, Forex, so that way you can get a sense of how I do this in a lot more detail. Because if I put that inside of this video is going to be an hour long. So we want to keep it short and sweet. If you're tired of not feeling comfortable with your entries, then the Profitable Traders Academy membership is going to change that. And inside of the membership, you'll get access to my full strategy with the step-by-step top-down analysis that we just talked about in a lot more depth. You'll be able to ask me questions inside of the membership in almost real time, and then also get feedback from our other members. So go ahead and check the link in the description and join the community today. It's going to really elevate your trading. So speaking of technical analysis, I also do that, and I find confluences. So confluences are essentially a fancy way of saying reasons for taking the trade. So with technical analysis, I really get into the details, but I don't rely on a whole bunch of indicators. And if you've seen other videos on this channel, you see that I use very little indicators. I do use some of the tools inside of TradingView, but as far as indicators, depending on the strategy that I'm using, and if you want to know the 3 strategies that I use, there's going to be a video on this channel explaining that. And when it comes to the indicators, depending on the strategy, I may use moving averages, and that's probably about it. Mainly because I also do long-term investing, and with that, I'm looking at much longer time frames and a whole bunch of other things. So moving averages allow me to be able to see what's happening really quick, and then I can move on to the next part of my trading plan, which obviously we're talking about right here in this video. When it comes to confluences, I basically look for 1 to 3 things, and that's typically enough information to give me confidence when entering the trade. And it also keeps my charts clean so that way they're not messy, filled with a whole bunch of indicators. When looking for confluences, one or two things that I'm looking for is I'm looking for support and resistance. I'm also looking for candlestick formation sometimes, and then other times I'm looking at straight up price, especially if it's a round psychological number. And if I'm looking at support and resistance, it matches up with that as well. Then that's going to be a confluence that I'm looking for as well. So once I get a sense of that bigger picture, like we talked about the top-down analysis, then I want to make sure that those confluences line up with the analysis I've already done. If you want to see which candlestick patterns I use, then check out the video called 4 Profitable Candlestick Patterns to Profit in Any Market. These are things that I use no matter which strategy I'm using and no matter which market I am looking at. The fourth thing I do is I set alerts and I wait for my trade to appear. This might seem minor, but setting up an alert is an easy way to catch trades without being stuck at your computer all day. And here's where trading gets interesting. Waiting for your setup can literally make or break your trade. So it is also the difference between having a little drawdown and a lot of drawdown. And if you're in deep drawdown, that could also mean that you get stopped out of your position, and it may take you out of the trade and then eventually going up in the direction that you wanted it to go in the first place. That has happened to me so many times, and it is very frustrating, which is why I've developed a lot more patience inside of the market. And by setting up these alerts, I avoid chasing trades, and it also frees me up to do other things while I'm waiting for my setup to happen. So for instance, let's just give a quick example. So let's just say I am looking at Goldman Sachs. This is a market. I don't really use trend lines, but when it's obvious, I will draw a trend line like I do here. You can see that I do have some moving averages, and I do use Fibonacci retracement levels. Sometimes I am experimenting with things, and once I feel like I've mastered it, you will see a video on this channel about it. But right now, we do see that price is all the way up here. So one thing I do want to do is I want to know when price breaks this high inside of the market. And then I also want to know when price comes back to this support level right here. And as you can see, it's almost perfect. A nice round psychological level of 599, really close to 501, and it's also 500. That's just a no-brainer for me. So just to make this clear, this area was roughly here inside of the market. And then as you can see, I do have other alerts that are set up inside of this market because I want to know when price comes back to these levels, because these could be potential buying opportunities for me, because when price gets up to this level, or any market, when it has made a higher high inside of the market, usually there's a lot of profit taking. People take their money. You may see price jump around, and then price eventually goes back down. And then once price goes back down, people tend to buy, and then the price goes up, sometimes much higher than it did before. So this is basically my mindset when it comes to setting my alerts and waiting for my confirmations. So on that note, the next thing I do is I execute the trade. So just like I talked about here, there's no second guessing or anything like that inside of the market. And if you've ever felt like you're gambling when you're entering a trade, planning is really going to help you a lot. Build that confidence and not feel like you're just rolling the dice. Because if we hit the buy or sell button, we already have a 50-50 chance of price going in our direction or not. But when we plan, we actually increase those odds of price going in the direction that we want to, because we've planned out the trade. And then it also gives us a lot more confidence and not feel like we're gambling. So for instance, when I see my different confluences that pop up, whether it be price, a candlestick entry, or some other confluence inside of the market, at this point, when I hit that buy button, usually I'm buying. I just let the probabilities play out. And of course, there's no such thing as having a guaranteed trade, but it's not my job to focus on the things that I cannot control. It is about me focusing on the things I can, and planning is one of those things. And then also executing on that plan is another thing that I could do as well. And of course, setting a stop loss inside of the market. So let's just say I would put my stop loss here inside of the market and making adjustments as I go, maybe taking partial profits, or maybe just closing out the trade completely. Or if I am satisfied with the profit that I've made so far, maybe I don't want to wait for it to go much higher, although the potential is there. I just want to take my money and go. And that's typically what I do. To wrap it up, we've gone from the fundamentals to talking about confluences. I use top-down analysis inside of my trading. I also find key levels. I set alerts. I wait for candle confirmations, price, whatever inside of the market, and then I execute the trade. So this is a surefire way that I've remained profitable inside of the markets instead of just crossing my fingers and hoping that price goes in the direction that I want to. And as you probably notice inside of this process, each step builds upon the last step. So it's really important to follow these steps, and you can put all of these things on side of a post-it note, keep it on your computer, so that way it's something easy for you to reference when you're actually analyzing the market and looking to take a trade. If you're ready to build a solid trading plan or process for yourself, then join us inside of the Profitable Traders Academy. You can find that at profitabletradersacademy.com. And in this community, you will get help from myself and others, and you'll also get more in-depth breakdowns in order to help you stay on the winning side of the market. I'll see you there.